Today, I want to talk about one of the most dominant game companies of the last decade. Blockbuster after blockbuster, this company forged through some of the most innovative years of the gaming industry. However, this titan faces serious scandals and controversies that have swept the internet and rocked fandoms. But have these controversies created an opportunity to buy this vanguard of the gaming industry? That's right, today we're looking at Activision Blizzard. Hey everybody, and welcome back to Dollars and Cents, helping you make sense of making dollars. Interestingly, Activision Blizzard was founded by the disgruntled employees of gaming legend Atari, and at first floundered about without a really clear direction. In the 90s, the company pivoted to software development, attracting the attention of a group of investors that later bought it. This group established a solid direction, and under them, Activision scooped up other game studios and IPs. This includes games like Call of Duty and Guitar Hero in the early 2000s. At the same time, Vivendi Games followed a similar business model, forming a gaming conglomerate starring a game studio called Blizzard. Needless to say, Blizzard took the gaming world by storm with its legendary IP, World of Warcraft. Eventually, a proposal suggested a merger between Activision and Blizzard of Vivendi Games. With their merger set, newly formed Activision Blizzard became titanic in the gaming industry. However, Activision Blizzard freed itself of Vivendi altogether, buying its stake in the company. Now its own standalone company, Activision Blizzard acquired King Digital Entertainment. This company is responsible for the Candy Crush games and Farm Heroes, amongst a slew of other games, strangely including a Crash Bandicoot game. With this $6 billion acquisition, Activision Blizzard moved into the fast-growing mobile gaming market. Ever since then, in the last decade, AB has been on a tear, and has seen some controversies tearing into it. Unpaid royalties, sexual misconduct suits, patent violations, and more. ATVI faces many challenges, often by its own doing, so let's take a look into Activision Blizzard's finances to see how these scandals have or haven't affected the company. First is revenue growth. Unsurprisingly, Activision Blizzard delivers. In 2015, its total revenue stood at $4.6 billion. In 2020, that number rose to $8.1 billion, nearly doubling revenue in just 5 years. Second is shares outstanding. Like always, we want to see the number falling. AB, though, is diluting its shareholders. In 2015, the company had 728 million shares outstanding, but in 2020, that number had climbed to 771 million. I have to say, though, that I was expecting this, and that I expect Activision Blizzard to continue doing it. Third is free cash flow growth. In 2015, the company had $1.15 billion and reported $2.2 billion in 2020. This jump indicates that its free cash flow is growing faster than its revenue, signaling that margins are improving and efficiency is getting better. And instead of looking at our usual current assets versus current liabilities, we're going to compare the company's EBITDA average over the last 3 years to its net debt. This is the total debt minus the company's current assets. Activision Blizzard's EBITDA average over the last 3 years is $2.82 billion. The company has negative $4.2 billion in net debt. Activision Blizzard can use its current assets to pay off all of its debts, an incredible position to be in. Since this can happen, the company's EBITDA doesn't matter as much in this case compared to its net debt, as it doesn't have any. Moving on is a valuation metric. If we take the average 5 years of free cash flow at $1.93 billion and multiply it by 20, we get an expected market cap of $38.6 billion. Currently, ATVI's market cap, even with its recent fall, stands at $47.1 billion. In other words, still overvalued based on this metric. One of the last few things I want to look at is the average of the last 5 years of return on invested capital. This number is 9.7%, so just barely above our goal of 9%. The trailing 12 months ROIC is a solid 13.5%, also above our 9% goal. And finally, Activision Blizzard does not pay a dividend, which I sort of expected. Overall, I think Activision Blizzard is very financially healthy. With its ability to pay off its debts through cash, it's hard to imagine it going bankrupt anytime soon. However, before you decide to invest based on these numbers, let's take a closer look at the company itself. By now, most people are familiar with Activision Blizzard in some way. It hosts some of the biggest games around: Call of Duty, Overwatch, World of Warcraft, StarCraft, and more. Every year, there's just about a new Call of Duty dominating the market. Overwatch is due for a sequel, bound to attract a resurgence in players, and Diablo is getting a new installment. While these have faced delays, I'm mostly confident in the company's ability to deliver on these games. In years past, payment was usually a one-time deal with DLC or such offered over time. However, Activision Blizzard has been slowly shifting that model to a more recurring revenue stream. This practice is quickly becoming mainstream as big companies like Activision Blizzard see more money pouring in. As we see in this graph, net revenues from game sales have stayed relatively flat, but the recurring revenue segment has been growing very quickly from 2016 onward, and this is where Activision Blizzard excels. With an impressive portfolio of franchises, its in-game transactions have pumped revenue up over the last few years. The last catalyst, though, is one that I've heard mentioned the least. I think Activision Blizzard has positioned itself to buy another big game studio. Who that may be is anyone's guess, but it certainly has the means to do so. The amount of cash it owns can pay off all of its outstanding debts, but I believe that to be an underutilization of its cash on hand. True, the company did just buy Digital Legends for an undisclosed amount, but I believe it can very easily buy another big competitor. While all this is good and great for Activision, there's also some serious concerns regarding the business as it stands today, and I'm sure you might have encountered them already. Over the past year, the company has been embroiled in a tumultuous legal battle. In July, the California DFEH filed a lawsuit against Activision Blizzard for sexual harassment and a myriad of other claims. After that, other regulatory bodies got involved, including the SEC. I'm not going to make any moral arguments for or against any of these claims, that's up to you as the investor. It's just important to acknowledge the far-reaching implications of these for the company as a whole. CEO Bobby Kotick took a pay cut as a result. Supposedly, the company is also making changes in response. This hit on the company's reputation in combination with a disappointing earnings call has actually affected its share price. In the last 6 months alone, Activision Blizzard's share price has dropped 60%. If it acts to truly resolve these issues, I think the company can move past this, but it's gonna take time. Even if the company bounces back from this storm, the fact remains that their Blizzard segment has only released one new franchise in 5 years. True, there have been many additions to flagships like World of Warcraft and a remaster of Diablo. The only real new original title added is Overwatch. Since that game came out in 2016, Blizzard hasn't really moved to work on any new original titles. If anything, Diablo is set for a 4th installment and Overwatch will finally get a sequel game. While focusing on successful games is good, the company's lack of new titles actually worries me. As a fan of some of these previous games, I want to see more innovative game-changing titles coming out of the game company that's grown this big. Plus, the gaming industry moves at light speed. The biggest companies are always changing and shifting. If one of Activision Blizzard's big three falls out of favor and fails, that could be a 15% loss of revenue right there. We got a hint of that in 2019 too, when the company released mediocre products and its net income plummeted over $1 billion in a single year. Overall, I think Activision Blizzard is a troubled business right now, despite its current financial health. These scandals and lawsuits and this lack of new titles troubles me as a potential investor. Time will show whether or not Activision Blizzard addresses the rotten root issues and changes for the better. So the question remains, will I be buying Activision Blizzard? The answer? Well, no. Seeing as the market and industry is rapidly changing and the issues I just went over, I just don't believe Activision Blizzard can hold on to its dominant position like it has in the past. I also won't say it's over for the company either. Obviously, it's still doing relatively well in terms of its finances and has plenty of time to turn around. For now though, I'm just gonna stay away from Activision Blizzard. But of course, go and do your own research about the company. Don't listen to some random guy on the internet. Decide whether or not it's a good fit for your portfolio and go from there. With all that said, thanks for watching this video on Activision Blizzard. Leave your thoughts in the comments section below or join my Discord where we can discuss this game giant. Until next time, I will see all of you in the next episode of Dollars and Cents.